Hello again and welcome back to London. The British taxpayer faces losing billions of pounds after the government decided to offload its stake in RBS. So why are they doing it now? Well, that's why I've been to ETX Capital to speak to David Papier. Let's start by talking about RBS. There's always going to be criticisms because it's a political decision. But why has the government decided now that it's time to offload its stake in RBS?
Well, it's a similar situation to Royal Mail as well. Now, the government is looking at ways to find money to reduce the UK deficit, which is amongst the highest in Europe. You know, UK deficit was 5.7% of GDP, whilst national debt was 89% of national income. Now, in terms of RBS, I'm not so sure that this is the right time to sell off down their 79% stake, which also follows the Lloyds sale. Now, to the taxpayer, this is not a good thing. You know, unless the shares soar rapidly, you know, taxpayers are going to make a loss. The stock is 28% lower than what the government would need to recoup their investment. So the issue here is that the Chancellor said 2 years ago that he would only countenance a sale when the bank was fully able to support the economy and they were going to get good value for it. And let's face it, neither of these tests have been passed.
Is it a case that George Osborne's just a bit desperate because he's got this massive deficit that he's trying to get under control?
I think desperation does come into it in a sense, absolutely. You know, the GDP is so far away at the moment from national income, something has to be done about it. And the sale down of these you know, organisations is going to go some way to repairing that.
Yeah. Let's move on to the commodity side of things, because we all know that commodities are so important to the FTSE in terms of a weighting. We've got a bit more clarity now from OPEC. Do you think that the commodity companies have been really struggling with the low prices? Is there any light at the end of the tunnel for them?
Okay, so I think if we look, say, from 6 months ago, I would say yes. You know, oil has gone up almost $20 from its bottom, but you look at iron ore, for example, which is still below $60 a tonne, which is the level which firms need to break even at. Now, for the future, maybe not. If we look at, you've still got global growth problems in Europe and China. You've got the threat of interest rates rising in the States, which means a stronger dollar, which is essentially bad for commodities. But the shining light here is that the policy easing by the Royal Bank of Australia. You know, a weak Aussie could spur trade for miners in the region. Now, you could also argue that we're seeing a loose central bank policy in strengthening US growth. Now, historically, this has been good for commodities. Will this lead to investors changing their negative view? I'm not so sure. Because I think what we've got to look at is that the sector's suffered prolonged poor returns, both in absolute terms and relative to many other stock markets. Now, if global growth outside the States does pick up and sector valuations start looking more attractive, you know, this sell-off could provide a compelling opportunity to start building positions within resource stocks.
And what about the FTSE more broadly? We have a Fed hike on the horizon. That's going to maybe concern investors in terms of those taps being turned off from central banks generally. Where do you think the FTSE's heading?
Do you know what? I think for the short term, we're going to see probably a bounce in the FTSE with the decent economic data that's coming out of the UK. In the long term, when interest rates go up in the States, I think we could potentially see a pullback. If you think the FTSE's weighted 30% by resource stocks, if the stronger dollar does come into play, what effect is that going to have on commodity prices? They're going to come down. And what does that mean for the bottom line of mining companies and resource stocks within the FTSE? The share price potentially could come down. So what does that mean for the FTSE? I can see a pullback if that does happen.
Well, short and sweet there from David, but still worth the listen. Stay tuned for more interviews and analysis, but from London, goodbye for now.